And we're live. Good morning.
Hey,
How are you?
I'm well. Thank you. How are you?
Doing great. Doing great. We're going to start off with silver again. We had that big dip pressing hard below that long term trend line, tempting, looking even threatening to go lower, simply because when it's popped back up again here, it's being pressured in this little zone here. There's that pivot line above and the trend line below. May very well see that turn into some buildup of energy as it get a buildup of energy as it goes through this week. If it goes down, the next the next support is 58, possibly even 54. Wouldn't be the most terrible thing to occur. However, that would indicate that they are still creating artificial fear in the market because the physical markets are just getting dried up right now with all of the fear of war and economic crisis. Even people are talking about going and stocking up with toilet paper again. Not because, you know, not because it's, how do I say this? Usually, whenever that term goes forward, oh, we got to go stock up on toilet paper, it's because most people are going to go and reactionary with reaction or in a state of reaction, go and get a bunch of toilet paper. Not because there's a shortage of toilet paper, but because just people are thinking that toilet paper is getting scarce, and then we got to go get it. No, there's no shortage. You're just panicking, and that's what creates the shortage. That kind of thing is, I think, going to be really played with by the supply chains, simply because they saw how we reacted last time and thought it was funny. So the fear mongering that we're seeing in the news is just preparing people for that fear for when, oh, look, the stock market crashed, toilet paper's rare. So that it's like a self-fulfilling prophecy almost. Um I'm going to just delete that. We don't need that anymore. And I'm going to delete this trend line here because we are now following this one. So both gold and silver reaching down to lower lows, but still being propped up by long-term trend lines. The gold-silver ratio still climbing. In fact, forming higher lows and higher highs. Right now, tempting a lower low. We'll see whether or not that trend line holds. Going into the Japanese market, we can see that the lower lows are still providing, or the resistance is still being dominant. Price action is continuing to go down. Right now, we've been seeing some consolidation since the weekend. But what happened was interesting. There was an article that I saw yesterday that within 5 minutes, I'm going to go to the 15-minute chart so we can just see how. Actually, you know what? Let's see if I can go down to the 5 minute. I should be able to. Yeah. So this movement here that occurred 5 a.m. Monday morning, that's 2.5 hours before the markets opened in the US. Yeah, it's Japanese markets. And you'll see where I'm going with this in a second. Japanese markets all of a sudden went way up in a matter of minutes, literally 5 minutes, from 51.5 to 53.9. 4%. Just all of a sudden, in 5 minutes, 4%. That doesn't happen very often. When it does, it's pretty substantial. I remember the U.S. stock market shuts things down if it goes 7%. If there's a fluctuation of 7% in a day, they shut everything down. This went up 5% in 5 minutes. What would create such a thing? Especially after the markets had already been opened for 14 hours in Japan. And then we're going to go to the US 30. Now, this is the same time frame. I'm not going to change time frames. I'm going to zoom out a little bit so we can see. So this is the price action of the Nikkei. Now we're going to go to the Dow Jones. Oh, look at that. A similar movement. And it all happened within 5 minutes. In fact, again, 2.5 hours before the markets even opened, 3.46%. Takes a little bit more money to move the US markets around. So it wasn't 5%, but that all happened within 5 minutes. What on earth? But not only that, but now we're going to go to oil. What? Oil all of a sudden just dropped? All in that same 5 minutes. Isn't this always fascinating? It's like people are like, oh, where'd that money come from? Well,
Did those things happen at the exact same timestamp?
so here's the US 30. The big candle was at 5:05 a.m. yesterday. Nikkei. There's the line, 5:05 a.m. Oil. Oops, that's not oil. Oil. There's the line, 5:05.
Wow.
Isn't that
What
something?
an amazing coincidence.
It's so funny too because most of the world they see these big movements and they're like, "What happened?" Well, look at more than one chart and you might just be able to tell what happened. And sure enough, Unusual Whales, a big account that I follow on X because they report on these unusual movements. There was one one entity conducted these trades all within that 5 minute period. They knew what was going to happen. They shorted oil and made 13% in 5 minutes. At the same time, all within 5 minutes, these trades all happened within that 5 minutes. They went ahead and put $1.5 billion long on the US 30. 1.5 billion, 3% of 1.5 billion, what was that? $30 million in 5 minutes. Oh, the stock market's so volatile. We don't know why. Maybe it was, they'll say things like, well, it was because that 48-hour deadline that Trump gave Iran, that's what it was that Iran went ahead and they didn't blow anything up. No, it's okay. It's okay now. Oil went down. We're gonna be fine. No, it's just manipulation. And it was the same account that did all of this movement, all within 5 minutes. Isn't that something?
First of all, to have that kind of money to do that. Second of all, to be able to get away with it and not go to prison.
Yeah, and because it's not even hidden, it's on X. Like Unusual Whales has been doing that for a long time. They actually started their whole business by disclosing to the people which senators had positioned their what positions were they taking in the stock market. That's how they got started. We just want to be able to expose when people who would have the knowledge of the direction of the market, they would have the knowledge. How do they position their money? And why is it that they, like, it doesn't matter who goes into the stock market, the success rate amongst politicians is astronomical. There are traders that can't get as accurate as politicians with their money. So Unusual Whales started off, and that was their thing. Find out Pelosi's trades. That was their tagline. Well, it's public. That information is public. That's why it's like, oh, I'm going to take my company public. Okay, then you're getting a stock, and you're going to be on the market, and everybody will be able to see what it is that who it is that's buying and selling. I don't know who the entity was. I don't know if that was disclosed yet, but it was one entity that did it all. One of the things I got thinking about was, oh, hang on a second. I wonder if we have a similar situation of what happened in 2008. In 2008, 20 minutes before the crash, Wall Street executives were calling their wives, telling them, go and take out all the cash you possibly can right now, drop everything. I'll stay on the phone with you. Go now. Go get all the cash you can out of the ATMs because in about 2 hours, there's not going to be any cash in the banks. That happened. What stopped it from happening? Does anybody know? I will tell you what stopped it from happening. All you got to do is go to Google and type in China ghost cities. China said to the whole world, we will save you. Like this is what's going on. Let's go visit this. China said, we will go ahead and save the entire world's economy. We have an entire generation and a half of single boys, and we can't have a revolution. We would lose everything that we've worked hard to build. So we will go ahead and build. We will buy all of the lumber. We will import the oil. We're going to be going double down on construction. We're going to build an infrastructure so that the world economy doesn't crash. They were calling up Australia for lumber. That's how desperate they were. They became the savior of the crash. Folks, the markets weren't even open in the US when that happened. We see this kind of movement, like we see volatility. I'm going to show you where we normally see this kind of volatility. I'm going to go back. This is Monday, the 9th of March. Okay. Look at that volatility. That happened at 4 o'clock in the afternoon. Markets were closing at that time. Here, this is midday. 5-minute chart. Here's some volatility here. Down and up. Look at how that ATR rose. Oh, look at that. That was right after market open. That was within the first 30 minutes of market opening. All of it. Here, this volatility, that's when when would that have been? That would have been the London markets opening. Okay, so we normally see that kind of volatility somewhere around open and close. not 2 hours before. There, this one happened midday on Monday. But the volatility started. There's where the ATR went up, right there. 7:30 a.m. That's when the markets open in New York. So this is an unusual movement. What's this one here? Yeah, market close. 4 o'clock. Oh, no, wait a minute. This was here? Yeah. Well, market close Sunday on the 8th. This drop, Sunday the 8th, is like markets aren't open. This was the Japanese markets opening. So there can be volatility to that. Because Japan can buy the US 30. They've got that on their index. They can go ahead and do that. So these orders get placed in and everything just gets whoa thrown out of whack. Right? But then Monday morning, ATR jumps up. Look at that. Market open. Right? We think, oh, it didn't do anything. Well, that's called volatility. This is also volatility. This volatility just consolidated, that's all, but it's still volatile. That's why the ATR went up. This here, that's midday. This one here would have been when the Japanese markets were closing. But this, where are we? That happened so far outside a market opening or closing. That's unusual. Because they know the people that have that kind of money, they just make a phone call and they plan this weeks in advance. You can't move $1.5 billion in 5 minutes. That it all gets planned out week at least in advance. All they got to do is make a phone call. Which direction do I need it to go? Oh, you want the markets to look like they're doing better? Like I can do that. Sure. I'll just you know what I'll do is that I'll just do a trade and I'll execute the trade on oil, sell out my position on oil, make the price drop. That way everybody calms down. Meanwhile, I'll just go ahead and put that money over here and watch everybody look how exciting this is. There's life back in the economy now or whatever. Now on the daily chart, we don't see it. Right? This is now zooming back out again. We don't see that kind of stuff on the daily chart. And so then it doesn't go on the news because it's not significant. Oh, but it's so significant because it tells you that there is nothing real. When you zoom in and you start to analyze how this stuff plays out, you realize there is nothing real about these markets at all. Bitcoin dominance still staying within this trend from February, end of January. We have been consolidating though here. This was the previous low, February 2024. Been consolidating ever since, getting smaller. The energy buildup is already occurring. We'll see what happens. This consolidation has been a long time. Ever since November, we've been back and forth between, 58, 58 and a half, and 60. Bitcoin prices also rising. We did see a breakout going down below this trend line. We'll see what happens here the rest of the week. But we're at a critical point. We're in between these two. Yeah, we're halfway between these two major pivot points. On top of one right now. So if it holds, great. We'll probably see another high get created, coming back up to 78 level. But if it can't hold this one, we're probably going to be heading down, likely to break below. This is a nice pattern to see ABCD already forming on that daily chart. If we zoom in on the 4-hour chart, you'll see it more plainly. A, B, C, D, forming higher highs and higher lows. But this here, this shows weakness. We broke down below that trend line. We didn't even attempt to retest this high here. We couldn't even beat out the high that was prior to that new high. So this is not a good sign for the price. Now, again, it doesn't mean that it's going down, but the likelihood, from a technical analysis perspective, that likelihood has just gone up. At the same time, that doesn't mean it's a bad thing because money is going into other assets. Monday, 2 a.m., 3 hours before, and it doesn't that there's no causality or it doesn't mean that there's a correlation between the two, but 2 hours before the big fluctuation in oil and the major markets, this was here the Ethereum big nice boost. Bitcoin got it as well. So lots of money came into cryptos in that time. But it also went below. That's the key. Crypto markets trade 24/7, by the way. There's no closing of those markets. So Saturday afternoon is when it fell below that trend line. Not a good sign. Not a good sign for the price action. Again, doesn't mean much, but one of the reasons we've been watching BitTensor. Oh, look at that. It's going up. What's going on? The money is being diverted. It's going into crypto. We're seeing the volume. Yes, Ethereum actually jumped up over the weekend. But it didn't go above that line because the money, when it came in, it went to another token. BitTensor creating new highs. Look at that. I do expect to see a pullback simply because this is pretty good money. It made 78% in the last 2 weeks. Remember, that's ever since BitTensor got that new deal with NVIDIA. Smart move. XRP, it didn't get the money. Why? I think the XRP's pretty much got its foundation. You know, it's been around a lot longer. BitTensor, if we go to that weekly chart, it's a pretty short chart. So this one here is that next piece of infrastructure that's being funded right now. Now you can see why I sometimes look at life as occurring in slow motion. Midnight, coming back to some previous resistance. ADA, still consolidating back and forth. We did get this ABCD pattern here. This low went below though, and we're doing it again. Yeah, and we might be seeing just some heavy support, like where it's like really testing support, and so that might be doing what I disappeared, didn't I?
I did too, just like yesterday.
Fetch getting up there. More and more people are starting to recognize that this AI bubble needs to be mitigated. You know what? There was a I think it was one of Anthropic's lead developers was saying that that if AI shut down, the the it would be catastrophic because people are companies, businesses, programmers, writers, tons of people have now become dependent on it. I got to be honest. The things that I'm building right now do require AI. I could do it with WordPress, but it would be extremely it would take a terribly long time. And I would need to have a team of people working with me to be able to accomplish, what needs to be done in 6 weeks. I would need a team of people to accomplish that within 6 weeks. We're at that point already where the economy is now reliant on this working out. And as a result, people are gravitating towards other options that allow them to have more governance over the models. It's imperative that we all consider the prudence of having your own models. If you're reliant on a specific model and that model just decides to turn off the switch because they don't like the content that you're creating with it, that's a real possibility. Then yeah, you're out of luck. I'm learning more and more that really if you're not able to communicate what it is that you want to a human, you won't be able to do it with machines. Machines will not be able to construct your vision. They simply won't. And that what's happening is that people are becoming reliant on models that have been preemptively they've been working at and developing it so that you become addicted to it, so that you become reliant on it, so that if you don't pay your subscription fee for it, that it will result in a loss of business or a loss of your well-being. They've designed it that way. Now, it doesn't make it wrong to use those models. It simply, you have to recognize the risk of being reliant on them. Create your own. No different than the internet. The internet was given to the people, and then people were like, oh, I don't want to. That's frustrating. If, you know what, if it happens again, I'm going to take some time and call up Lightspeed and just see if there's something going on because it has not happened like it's happened a couple of times where there's been some disruption, but not for 2 days in a row. Not like this.
Same time of day too.
Same time of day. So Fetch, I think that we're seeing that rise because people are valuing this idea of having more self-governance over the models that they use. Desync still consolidating, nice and low, 1.8 cents. tapping into the meme markets, meme coins. We've been creating some higher highs and higher lows within NPC for a while, but it's now showing it's coming up against some resistance here. We would need to see it get up above, find that trend line as support to be able to trust that we're actually headed upwards. Same kind of thing happening with SPX going sideways probably until we touch that line. That's typically what we see whenever we see this kind of consolidation. Polygon staying below that major support level, using it as resistance at the moment. Amazon over the last couple of days, since market opened up this week. Let me know. Let's just look at this a little bit closer here. Nah, since last week. In fact, since the 5th. I got to remember, these charts, they don't show much because there's only so many hours of trading per day in the stock markets. And so, it's the markets open and close all the time. And so here, this movement is just within the last 2 weeks. March 5th, Thursday, March 5th. Oracle actually having created a new high is coming back down, looking like it's going to find some support. Google dropping a little bit. We'll see how this plays out for the rest of the week. But that downward trend, that's the opposite of what Oracle is experiencing right now. Palantir rising, of course. I mean, Palantir, remember, the orb in Lord of the Rings, Saruman used it to see what's going on all around Middle Earth. Palantir just dumped $1.5 billion into the cowgorithm. It's actually worse than when I first described that. It's not that the farmer sits on his couch and watches the cow, get close to the edge of the border. No, he can actually take his finger on the iPad and draw where he wants the fence to be. Palantir just became an investor in that tech. Sorry, not Palantir. Peter Thiel, who runs Palantir. Don't worry, though. They're just going to do it to the cows. NVIDIA on the lower side of the consolidation range. That's it for market analysis.
When you spoke about the farmer being able to set the boundaries where the cow can go, my first thought was, what if somebody forgets to change the parameters and the cow overgrazes and can't get to food?
Yeah. Oh, yeah. Yeah. Imagine that, though, eh? Like, you're able to herd your cows without having to leave your home. You don't even have to mount a horse anymore. What are the horses? Well, the government uses horses too, remember?
Mm.
They trample all over people whenever they're protesting in ways that they don't like. Well, now you don't have to do that. All you have to do is make it so that, oh, look at how we don't like what you're saying online. And then there's a politician somewhere out there just going, zap.
Yeah, I can see that.
I don't have to get on a horse to herd my cows anymore.
No.
I can just get them to move wherever I want them. I'm not fighting this. I'm done. Market analysis is over. We got through everything and I'm not fighting the streaming. But that's it.
Perfect. Okay.
Thank you, everybody.